Let's talk about the most exciting event in Bitcoin, the halving. It's less than 8 months away. We're going to dissect the historic effect it seems to have on price and the boom and bust cycle. Now that Bitcoin has emerged as a global asset, do macro trends and global liquidity have more of an effect on Bitcoin's price? Will the halving once again be a catalyst for the next bull run? Or will this cycle be different? Also, we'll touch on what it would take to completely break the cycle theory in Bitcoin. Let's dig in. Most of you probably know what the halving is, but for those that don't, it's an event written in Bitcoin's code that occurs every 210,000 blocks, or roughly every 4 years, where the supply issuance is cut in half. So instead of the current 6.25 Bitcoin that is being released into the market roughly every 10 minutes, that number will halve to 3.125 as of sometime in late April 2024. Now, the halvings have been important throughout Bitcoin's history as they seem to be the main driver of the 4-year boom and bust cycles. The theory is simple. Supply issuance is cut in half, and thus less supply is reaching equal or growing demand, which means a supply shock is a catalyst for the beginning of each bull market. Looking at the chart of Bitcoin's price with the halving dates makes this look like an undeniable trend. Historically, the bull market starts either leading up to or shortly after the halving, and 12 to 18 months following the halving, we see the cycle top, followed by a 1 to 2 year bear market. Rinse, lather, repeat. Now, it's important to note that the current circulating supply of Bitcoin is already 92.75% of the total supply that will ever exist. That's a huge deal. That means of the 21 million Bitcoin hard cap, just shy of 19.5 million have already been mined and are either being held, have been lost, or are circulating in the market right now. Since the overwhelming majority of the circulating supply is already in the market, it would make sense that each subsequent halving would have less impact on price than the previous. In fact, the diminishing influence of the halvings on Bitcoin's price has been well documented. So will the halving coming up in April 2024 continue the trend and have a lessening impact on price appreciation and the magnitude of the bull run? There is an argument to be made that since the supply shock increases are already so small when compared to the circulating supply, the effect, if any, could be psychological in nature, based purely on marketing and hype around past performance. The fact is, Bitcoin has emerged as a global asset in the last few years, and it's already proving to be greatly affected by macroeconomic conditions. This is the first time Bitcoin has been around during an impending economic crisis, and we're currently at the tail end of the most aggressive Fed tightening schedule in history. To think the price of Bitcoin isn't affected greatly by liquidity in the system would be naive. In fact, there are intriguing correlations between global M2 money supply and Bitcoin, which both seem to have 4-year cycles, which just so happen to coincide with each other. Dylan Leclerc recently did a talk at the Baltic Honey Badger Conference in Riga, where he touched on this interesting correlation. Here's a clip.
Okay, so, one of the popular narratives and what I was trying to show with this previous chart of kind of that holder supply becoming more constrained and then drawing down as Bitcoin goes parabolic is, often like the halving is attributed to like Bitcoin's price runs. It's like, oh, well, halving happened, number go up. And, admittedly, like stock to flow is very great for showing that kind of like absolute scarcity. It was, one of the things for me in high school. I saw the stock to flow ratio and was like, well, great. The difficulty adjustment. What is all this stuff? And it kind of sent me down a rabbit hole. I won't lie. It's good content, but it's not really. We have so many other things to look at as to what's actually driving this, and the halving is a really, pretty, oversimplification of what's happening. So here's global M2. It's taking a bunch of different the M2 money supply of a bunch of different nations, putting it in dollar terms, so not the local currency. It's normalizing in dollar terms, and then the middle pane is the year-over-year percentage change, right? And you can kind of see when there's a massive expansion of the monetary supply, and admittedly, like M2 isn't the perfect measure of money supply. It takes into account bank reserves and all this, financial jargon, whatever. We're not going to get into that. But really, like the rate of change is what is important here. That's what's, kind of what you should take away. And look at that rate of change of the money supply, the global money supply in dollar terms, and the Bitcoin price, right? There's something there. Coincidence or not, who knows? But there's obviously something happening there with that chart, right? Bitcoin's, just recently became this macro asset, but it's kind of always been one, right? Even though there wasn't, the big TradFi funds and Larry Fink talking about it, and 5 years ago they were saying it's a money laundering index, and now they're saying, oh, Bitcoin's a global asset. Well, Bitcoin's always been a macro asset, right? It's always kind of gone with the tide of this.
So there is a case to be made that what has historically been driving the 4-year cycles has less to do with the halvings and more with global liquidity and broader macroeconomic conditions. Predator had a recent tweet that laid out this theory with much more conviction. He wrote, quote, "I continue to believe that Bitcoin's 4-year cycles are just coincidences that have little to do with the halvings. Global M2 money supply has actually been having its own 4-year cycles as of late, and those cycles have been reflected in most risk assets, including Bitcoin." TSMC Trades responded saying, quote, "This is the correct halving take in my opinion. Just look at interest rate oscillations, annualized equity returns, and manufacturing PMIs next to Bitcoin cycles, and it becomes plain as day. The location of the halving is a wildly convenient coincidence." TSMC also has a video on YouTube that he links in the tweet where he lays out some of the data and charts to support this theory. So while this theory is definitely interesting, it could be the case that what drives Bitcoin cycles is a confluence of the supply halvings and macroeconomic conditions. Maybe the fact that the halvings just so happen to line up with global liquidity cycles is a convenient coincidence, as TSMC says. Or maybe you're one of the mystics who doesn't believe in coincidence, and Satoshi, being the alien time traveler or just extraordinarily genius human that he was, purposefully engineered the Bitcoin halvings to line up with the broader market cycles. There are also some that point out the halvings lining up with the 4-year presidential election cycle in the US, which is interesting as they also line up with global economic cycles. Whether or not the halving in 2024 is a catalyst that starts the next bull run is yet to be seen. And we may not even have enough evidence to say concretely or not that it is the catalyst, even if the bull cycle starts shortly following it. It's looking more and more like the Fed will have to start lowering rates soon before a real recession hits or something breaks in the system. This, once again, could line up perfectly with the next halving, and the mystery, speculation, and debate on what really drives the Bitcoin boom and bust cycles will continue. And let me just say how incredible it is to be alive right now to witness Bitcoin in its early monetization process. The fact is, all we can do is speculate and look to historic data points in a feeble attempt to predict what this incredible technological marvel will do next. One thing is certain, the most important metric that will affect Bitcoin's value into the future is demand. And that is next to impossible to predict accurately in the short to medium term, as it's based on so many global factors, largely involving human action and emotion. That being said, if you believe in the value that the world's only global, permissionless, and censorship-resistant money with a fixed supply brings to humanity, you already know that demand for such a superior form of money can only increase in the long term. So regardless of what drives the next leg up in Bitcoin's price, Bitcoiners can rejoice and be confident in Satoshi's design and number go up technology. To finish off, let's touch quickly on what it would take to break the cycle theory in Bitcoin. Simply put, cycle theory dies when there's a mid-cycle pump in Bitcoin's price larger in percentage terms than the previous post-halving pump. I think this is inevitable, and it's only a matter of time before it happens. I mean, even a spot ETF approval this year or early next year could be enough to break the trend. And while it's true currently that Bitcoin is at the whim of the broader global economy, it's just a matter of time before the world catches on that this is in fact the ultimate risk-off asset, and it breaks free from the stock market, equities, and global liquidity correlation. And yes, I mean breaks to the upside. This could be perpetuated by more bank failures and a continued erosion of trust in the existing financial system. Also, more developed countries experiencing extended periods of high inflation or even hyperinflation can be a catalyst for Bitcoin demand soaring in the near future. So what do you think? Will the halving in 2024 be the main catalyst that starts the next big leg up in the Bitcoin price? Or do you believe global liquidity is now the bigger driver? Will the halving, the Fed loosening, and the inevitable approval of a spot ETF lead us to a larger and more pronounced bull run this time around? Will there ever be a super cycle? Leave a comment below with your thoughts, and please like and share this video if you enjoyed it. And don't forget to subscribe to the Swan Bitcoin channel for more Bitcoin signal.